Hey, what's going on, fellow traders? So today we're going off the charts and we're going into just more of a teaching session, okay? Because I've seen a lot of new traders, okay, a lot of emails coming in about this kind of mistakes that a lot of new beginner traders are making. And I want to help you reduce these mistakes. I want to help you reduce your losses, okay? So today I want to point out the top 5 mistakes that you might or might not be making, okay? If you're not making them, good job, okay? But if you see yourself making these mistakes, then make sure you take the appropriate action, right? You change your perspective and you make the changes, okay? So let's go into it, okay? So this 5 mistakes, right? I'll just briefly run through each of it, and then after that, I'll go in depth and talk more about these mistakes, why you're making them, and also, some of the changes in your thinking that you need to do, okay? So the 5 mistakes that I see a lot of new traders make is that, they have the wrong expectations, okay? And because they have the wrong expectation, they tend to overtrade, right? They have this, $1,000 trading account, or some of them even just, like a $500 trading account, and they are trying to make $1 million in 2 months, right? It's just not realistic, okay? A lot of you also just focus on indicators, okay, rather than price action. Okay, I talk about this quite extensively in some of my other videos about how you should be focusing on the indicators last, okay, not the first thing. Okay, a lot of you are so micromanaging trades. You don't give time for the trade to move, right? Before the trade has enough time to show whether it's a winner or loser, you conclude that the trade's a loser already. Okay, and lastly, a lot of you focus on winning rate, right? You guys say, oh, this signal provider has a 90% hit rate. You only have about 60%. You're not too good, right? These are the kind of questions that we get. So I just want to share with you my perspective on all this kind of questions that people send, and also point out the mistakes that you guys might or might not be making. Okay, so let's go into the first one. Okay, now mistake number 1 involves having the wrong expectations. Okay, so let's face it. Okay, most of you come into trading because you want to make a ton of money. Okay, most of you come in like that. None of you, or maybe let's say just probably 1% of you, come into trading because you're passionate about trading, you love trading. Okay, in fact, I myself, I was like that also. Okay, so it's totally fine. It's fine to want to come in to trading to make a ton of money. Right? I mean, there's a lot of marketing gimmicks out there which tell you that you can change your life with trading. And yes, that's possible, but it's not going to happen in the way you think it's going to happen. Right? It's going to take a lot of hard work. It's going to take a lot of experience, and it's going to take a lot of time. Okay, so it is okay if you have this kind of mindset or expectation right now, right? Like you want to make $1 million with $1,000 account, it's fine, okay? But it's not okay if you stay like that. Okay, if you keep thinking this manner, you keep thinking that you're going to quit your job next month, you're going to travel the world and make $1 million just because you attend this course, or just because you follow our signals. Okay, that's not the right expectation. Okay, so you have to move out of that expectation of yours. Okay, again, I repeat, it's okay to start off with the wrong expectation, but please do not remain that way. Okay, so I've seen a lot of new traders, especially some of the haters. I mean, it's just bound to happen, right? Haters who come and go, right? They come and go because they have the expectation that our trading signals must be 100%, right? We have angry emails writing in say, oh, why are your signals not 100%, right? And these are the kind of traders who, because they don't adjust their expectation, they don't change their mindset, they don't change their thinking, and that's why they get very disappointed, very frustrated that they are losing money. Okay, losing money is just part of the game, right? You win some, you lose some. Okay, so these are the kind of traders who quit. Okay, so if you are in your first month of trading, okay, please learn to adjust your expectation. If not, you're not going to last 2-3 months. Okay, so you don't want to set yourself up for failure. Okay, if you have the wrong expectation, you're going to set yourself up for failure. Okay, so let me tell you a story. Okay, or rather, let me give you an example. Okay, if you yourself expect to lose money for the first year, okay, versus if you expect to make money from day one, how would you approach trading? Right? Chances are, if you expect to lose money for the first year, you're not going to trade big. You might even trade a demo account, right? And if you incur some losses, you're going to say, hey, that's no big deal. That's just a tuition, right? It's no big deal. Okay. However, if you expect to make money from day one, then the moment you have a loss, which you will have, right? Let's say in your 5th day of trading, 6th day of trading, you have losses. You're going to say, no, 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 no. That why is everyone making so much money and I'm losing money, right? So you're going to give up. You're going to be frustrated, right? So the point I'm trying to make here is that the outcome is the same, right? In both cases, you lose money. But in the first case, because you have the right perspective, right? You do not give up because you know it's normal. But if you have the expectation of, making money since day one over here, then, you know, it's, you're going to give up, you're going to get frustrated, and you're just not going to push through. Okay. So another thing to note is also trading is a zero-sum game. Okay, let's talk about probably an example. Okay, not related to trading, and then after that I'll relate it back to trading. Let's say you are at a racing game, and you have to bet you have to bet money on a race driver. You have a professional race driver who's been doing it for 5 years, 10 years, right? He's a professional. And you have a new driver who just wants to try, his debut, right? He's just started his professional career. This is his first race, okay? So let's be logical here. Who would you bet on, right? Would you bet on the professional race driver or would you bet on the new driver? Chances are you would bet on the professional race driver, okay? It's a no-brainer. It's a dumb question that I'm asking, okay? But why is it when it comes to trading, most of you, right, most of these new traders, right, you don't have any experience and you are up against all these professional traders who have, sophisticated trading software. They're expert. They have years of experience. They are backed by institutional capital, and you expect to win money from them, right? As I said, trading is a zero-sum game, right? For you to win money, someone else must lose money, and only the best make money in this industry, right? So why do you have the expectation that from day one you're going to be profitable? It just doesn't make sense, right? It just seems like when people come into trading, they lose their logical side, of their thinking. They don't think things through, right? So trading is really like this, betting on a professional, race at a race course, right? It's only the one who is the most, experienced, who has the resources that have the edge in the market in trading. So that's something that you want to bear in mind, and you do not want to have the wrong mindset. So that's one thing to know. Okay, that's why you need to change your mindset. Okay, you don't want to just think that you have an edge in the market when you just start out trading. It's just not realistic. Okay, so I hope I drive home this point. Okay, it's mistake number 2 is over trading. Okay, now over trading is actually why most traders blow their account. You can see over here. Chances are, if you are trading for some time, you probably have blown account. The feeling sucks, right? Okay, but unfortunately, that's just the path to success, right? You're gonna blow your accounts. I personally blown a lot of accounts in my journey. So don't be ashamed of it, right? It's just part of the journey. Just make sure that you do not trade too big, that you control the losses, right? Now, if you think about it, over trading, the root cause of it is really having the wrong expectations, right? As I talk about over here. Okay, you have the wrong expectation, and that's why you overtrade, right? Think about it this way. If you expect the trade to go very well, you expect that trade must go in your direction, right? It is logical, right? It's even compelling to want to trade bigger, right? Or you want to go, all into your trades, right? Because you sort of know, right? With a philosophy, right? You kind of know that the market will go your direction, right? That's why you want to trade big. But here's the thing, right? If you kind of know, then you are having the wrong expectation already, right? Because trading is not about certainty. We can never predict with 100% certainty where the market is going, okay? In fact, the best traders are only right 50% of the time, right? Means they are only right 50% of the time. They make their money because when they are right, they make more money, right? Then when they are wrong, they cut their losses. That's why they're able to generate a positive return on their investment, right? So trading is about probability, not certainty. So if you can consider that you might be wrong, that your trade might end up in as a loser, right, you'll be less compelled to overtrade. Okay, in fact, you'll be super obsessed with risk management because you know that you could be wrong. Okay, you do not need to get it right. Okay, in fact, I think this is also very liberating for you because if you know that the best traders only get it right 50% of the time, and you don't have to get it right every single time, right? I think it's really very liberating. You know that you don't need to be perfect in order to make money. Right. I remember when I was still a struggling trader, whenever I make a mistake in trading, I would beat myself up very badly, right? Mentally, I would say, why am I such a terrible trader? Why can't I just stick to the rules, etc., etc., right? My idea of being profitable means that I need to be flawless in my execution. I need to be perfect, right? But as I studied other traders and through my own journey right now, you can see that we still do make mistakes, right? We still sometimes we even send out the signals, and we accidentally do a typo, right? We make mistakes, but that's part of being human. Okay, it's fine. It's fine. Okay, it's fine to make mistakes. Okay, what is not fine is that if you have the wrong expectation and you overtrade without a stop loss. Okay, that's not fine. So make sure you don't do that. Okay, make sure you don't overtrade. Now let's talk about mistake 3. Okay, a lot of traders like to focus on indicators rather than price action. Okay, because indicators gives you some form of certainty that the market is going down. If things don't work out, you blame the indicators rather than blame your own judgment. Right? I think that's very normal. I still remember when I first started trading, I was trying to find the holy grail. Right? What's the holy grail? You can see over here. Let me just see if I can draw it so that you can follow. Right? Sorry. Let me just here. Okay, no, it's not working. Okay, right. This is the holy grail. I thought it was, right? I thought this was the holy grail. You find a perfect set of indicators, you match them together, and if as long as you can find the right combination of indicators, then you're going to be profitable, right? That was my thinking too. So if that's your thinking currently, that's where you are at right now. You want to pay attention to this portion, okay? Because that's not the way to unlock the holy grail. Okay, so now trading is really about identifying the trade context. Okay, and whether you choose to use indicator or not, that's up to you. Okay, so what do I mean by trading context? Would be stuff like this over here. Okay, you want to pay attention to like the trend, news event, the key support and resistance level. These are the trade context, right? Is euro dollar in an uptrend, right? Do you have an important news that is about to be released, or maybe the GDP of US has just been released, and GDP is strong for US, and euro dollar is in a downtrend and it has just broke an important support, right? This is the trade context, right? You don't just look at the stochastic indicator or the MACD and say, oh, MACD is short, I'm going short. Okay, so this pointer over here is a very huge pointer, which I believe I talk about a lot in my videos, a lot. Okay, it's not one video, I talk about it in at least 3 or 4 videos. Okay, I always say that you want to look at indicators last. Okay, not the first thing. You want to look at indicators as your last align, right? Meaning your last portion of your analysis. Once you already have your bias, once you already know what you want to do, then you look at your indicators. You don't want to look at your indicators as the first thing to decide whether you should buy or sell a currency. Okay, so this one, how to do it, I do cover some of this in my other videos. So if you are new to this channel, you make sure to check out the other videos. Okay, you can see that we do a lot of videos like this that changes your mindset. Okay, because a lot of things that you learn from like those kind of conventional trading books, like chart patterns, all this, they don't teach you all this, right? Their job is to sell you on the next indicator. Their job is to sell you the book. Their job is not to help you become a profitable trader. Okay, in this channel, we are here, right? We're committed to help you. Okay, you watching this YouTube channel, we do not earn a single cent, right? We are doing this purely just to help you, and we don't want to hide things from you. We want to tell you the truth as it is. Okay, if you are making a mistake, we're going to call you out for it, because that's the only way we can help you. Okay, we don't want to sugarcoat things, we don't want to lie about it. Okay, so make sure you subscribe to this channel. Okay, make sure you take notes, you write this down. Okay, you look at indicators last, okay, not first. Okay, you want to form your bias first. Okay, in fact, we have a 3-day trading guide that teaches you how to form your bias and formulate your trading strategy. Okay, that strategy doesn't even require an indicator. Okay, so make sure you check that out. The link is in the description. Just check that out after this video. Okay, now let's talk about mistake number 4. Okay, this is a question that or rather mistake that I see a lot of new subscribers make. Okay, I get a lot of emails about this. Okay, so I see a lot of people asking, how do you manage your trades? You know, should I go with the H1? Should I go with M5? You know, I see that the M5 time frame is against me, you know, but I entered my trade on the H4. So should I still hold the trade? Okay, so first thing to understand is that for every time frame, there is a different trend. Okay, you're never ever going to see every single time frame in the same trend. It just doesn't work like that. Okay, and that's why trading is complicated. It's not simple because each time frame can have its own trend. Okay, so as I said over here, right, you see that lower time frame. Let me just draw it. Right, you see that lower time frame. Okay, this is not good. Yes, you see that lower time frame is forming a trend against you, and you panic and you exit the trade, right? Because you micromanage your trade. You don't let the trade hit its target, be it in terms of its take profit or its stop loss, right? Now, the root cause of this problem is that you don't actually accept risk. Okay, you think about it, right? If you really accept that there's a risk and that you might lose money, and you are okay with that, right, then you won't be worried. Think about it, right? You're only worried because you kind of think that the trade will go in your direction, but it is not going your direction. So you're worried. You're worried between, oh, will this trade be a winner or will this trade be a loser, right? You are in that zone of, you know, like, I need this trade to win, rather than, okay, this trade has a probability that it will work and it has a probability that it won't work, right? So this is the root cause. Okay, if you are micromanaging your trade, then you want to do a reflection about this. Do you truly accept the risk, right? Are you comfortable taking the risk? Are you over trading, right? As I talk about over here, are you over trading? Okay, so one reason why you are not accepting the risk is also because perhaps you trade too big, right? Your trading account is 1K, right? $1,000, but you are risking $300 per trade, right? In that scenario, of course, you're not going to accept the risk because you're trading too big, right? So you want to make sure that you keep your position size small, that you accept the risk, then you take the trade. Okay. Now let's move on to the last mistake, and then I do a recap of everything, and then we'll end off with this trading session. Okay, so mistake number 5 is that I see a lot of new traders focus on winning rather than the expectancy. Okay, they look at the winning rate. You know, they look at other signal providers, and you know, they see that this signal provider has a win rate of 95%, right? It's a pretty common marketing gimmick. You have a lot of you know, people who try to market their signal channel out there, say that you know, my signal channel is doing 95%, and then you look at our signals, and then you say, oh, this financial market wizards, you guys are doing 60%. It's not fantastic. You know, you guys are not as good as the 95% people. I'm going with 95% people. Okay, so the issue with that is that winning rate is only part of the equation, right? The question is, how much are you winning each time, right? There's no point in winning 95% of the time, but each time you win, you are winning 3 pips. And when you're wrong, you lose 100 pips. It just doesn't make sense, okay? You're not going to make money. You're not going to grow your account, right? Because you do not have a positive trade expectancy, okay? So the other thing I also want to talk about would be when you focus on this winning rate, okay, when you focus on winning rate, you are also very tempted to close your positions prematurely, okay? Because the moment you close your trade, what happens is that you secure a win, okay? It's recorded as a win. But if you leave your trade running, there's the potential to lose money. And that's why you will rather close off the trade. And that's very bad because you are not riding your winners, right? As you should know, in trading, the way to make money is to ride your winners and cut your losers. But if you focus on your winning rate and you close your trade prematurely, then you're doing the opposite, right? You are trying to cut your winners and you're trying to ride your losers, okay? So this results in small profits relative to the losses you incur, okay, and that's not a wise move, okay, because you need to pay off your losses if you want to be profitable, okay. So this is what a lot of people do, right? You set a take profit of 30 pips, right? If you follow our signals, our take profit is usually 20 or 30 pips. But, you know, as price move, you know, maybe even 7 pips, 10 pips in your direction, you get, you get fidgety. You cannot take it because you want to register a win, okay? You want to close it off as a win. You close the trade, okay, and then the trade goes on to hit 60 pips, 90 pips, and you are left missing out, right? So the question is, did our signals not work, or you just didn't manage it well, right? I think the answer is pretty clear. You just didn't manage it well, okay. So yep, I explained that over here, okay. Yeah, one more thing is, so I think I explained this at the start, right? A high win rate doesn't mean anything on its own. You want to consider the trade expectancy, okay? But before I talk about trade expectancy, I want to talk about this, okay? One of the reasons why you are very inclined, or rather a lot of new traders are very inclined to have a high win rate, is because it strokes your ego, right? It makes you feel very good about yourself, like, oh, I'm so accurate. I'm so accurate. My trading system is working, right? It gives you a false sense of success, that you're successful. But in reality, if you really look at your equity curve, it doesn't reflect that your trading system is working, right? So please do not stroke your ego, okay? We are here to make money. We're not here to be egoistic. We're not here to show off to people. I mean, if you want to show off to people that you make a lot of money, you can, but make sure you actually make the money first, okay? Don't show off your high hit rate, high win rate, but you have nothing to show for it when it comes to making actual dollars, okay? So as I was saying, you want to focus on trading expectancy. This should be the metric that you focus on. Okay, I do have more videos about this concept, about how do you calculate your trade expectancy, what does it mean. Okay, I won't go into it in this video because this video has been rather long already. But you want to focus on this formula instead. Okay, this formula here. You don't just want to look at this in isolation. You want to look at how much money you win when you're right and how much money you lose when you are wrong. Okay, this one you want to be as big as possible, and this one you want to be as small as possible. Okay, if you can increase your average win size and decrease your average loss size, then even if you have a bad bad hit rate, it's fine. Okay, think of it this way: if each trade you are making average risk to reward of 1:3, that means if you risk $1 and you make $3, right? Even if you have a win rate of 30%, you are still profitable, right? Out of 10 trades, correct? Let me just draw it here. Let's say you have 7 losers and you have 3 winners. Okay, but because of the winners, each one you make 1:3. So this one, let's say you risk 1% per trade, you will make 9%, right? Because the average risk to reward is 1:3. Your losses will be 1% each, should be 7%. Okay, so net you still gain 2%. Okay, so this shows you that you don't need to focus on win rate as much, as long as you can get your average win size to be high and your average loss size to be low. Okay, so that's it. So to summarize everything, right, these are the 5 mistakes that a lot of people make. I hope that this video changes your mindset, right? You don't just watch this video, but you reflect on it. Okay, you understand it, that internalize the mistakes that you're making, right? Then you change your mindset, right? Because trading is 80% psychological. I can give you all the technical skills, I can show you the tricks that I learned, but I cannot change your mindset. Okay, that's the only thing you can do for yourself. I can do a 50-minute video, I can coach you, I can nag at you, but if you do not change your mindset and alter all this wrong thinking, honestly, no one can help you. Only you can help yourself. Okay. So number one is having the wrong expectation. I talk about how you need to have the right expectation when it comes to trading. Right. Don't expect to make $1 million in 2 weeks. Okay. I talk about over trading, right, and how over trading has to do with having the wrong expectation. Right. Don't try to become a full-time trader with a $1,000 account. That's not realistic. Right. I talk about how you should be focusing on the price action, context, rather than indicators. Okay, price action. Okay, I talk about micromanaging trades and how you need to learn to accept risk, right? That if you have problem accepting risk, then try trading a smaller position size. And lastly, I talk about focusing on trading expectancy, not winning rate. Okay, because winning rate is only part of the equation. So make sure you check out other videos if you do not know about some of these concepts that I talk about and I say that I cover in other videos. Okay, don't be lazy, right? Make sure you watch every single video. Binge watch our videos if you need. If you don't have money to fund an account with our brokerage and get our Forex course, okay, make sure you do this because this is free. Okay, you just need to be hungry to learn. And then you can get started. Okay, so if you need the free day trading guide, check it out below. It's free. Just spend some time studying it. If you want our free Forex course, link is also in the description. Just check out the bonuses section. Right, it's all there. Everything is free for you. All you need to do is you need to take action. Okay. So thanks for watching. If any questions about any of these mistakes and you need further elaboration, please comment down below. Our team monitors the comment. We read every comment. We'll do our best to address any other concerns you have. Okay, so thanks for your time. I'll see you in the next video.